I remember the exact moment the crypto bug bit me. It was like a switch flipped, and suddenly, the world of digital currencies seemed like the most exciting place on Earth. I felt this magnetic pull, a sense that I was on the cusp of something big. Late-night YouTube binges fueled by caffeine and the promise of financial freedom, charts only going up, a seemingly endless green wave of profit. Every dip was just a buy-the-dip opportunity, or so I thought. Stories of people turning hundreds into millions, it was irresistible. The allure of overnight success was a powerful drug. The dream? Quit my job, escape the 9-to-5 grind, travel the world, experience life on my own terms, unbound by schedules and obligations. Maybe buy a Lambo, a symbol of making it, a testament to the power of crypto. It all seemed so easy. Buy the right coin, wait for it to moon and watch the money roll in. Crypto felt like a lottery ticket with better odds, a calculated risk with potentially massive rewards. I dove in, bought Bitcoin, Ethereum, the cornerstones of the crypto world, and some random altcoins with cool names, hoping to catch the next big wave, the next 100x opportunity. I checked my portfolio every 5 minutes, heart pounding with every tick, obsessively tracking every gain and loss. But reality hit hard, like a bucket of ice water. The Lambo stayed in the showroom, gathering dust, and the moon was nowhere in sight, hidden behind a veil of red candles. The market didn't just go up, it crashed, plunging my portfolio into the depths of despair, whipsawed and drained me emotionally, leaving me feeling lost and confused. Instead of instant riches, I found a confusing, stressful maze of complex charts, technical jargon, and conflicting opinions. My journey wasn't a get-rich-quick scheme, it was a crash course in money, tech, and myself, a trial by fire that forced me to learn and adapt. These are the confessions of what I discovered along the way, the lessons learned from the roller coaster ride that is crypto. The first big surprise in the crypto world, it wasn't the technology or the jargon or even the wild price swings, it was the sheer emotional intensity of it all. The highs were exhilarating, the lows absolutely crushing. I always thought I was a logical person, someone who made decisions based on facts and figures. But crypto investing quickly revealed that I was just as susceptible to emotional biases as anyone else. One day, I felt like a genius, making all the right calls, and the next, I felt like a complete fool, questioning every decision I'd ever made. FOMO, fear of missing out, that insidious feeling. It pushed me to buy high, convinced that I was about to miss the rocket ship to the moon. I'd see a coin surging in price and I just couldn't resist jumping in, even if it meant ignoring my better judgment. Then, inevitably, came the crash. My portfolio tanked, seemingly overnight. And panic set in, a cold wave washing over me as I watched my hard-earned money disappear before my eyes. FUD, fear, uncertainty, and doubt began to creep into my mind. It made me want to sell everything, to cut my losses and run, even though I knew, deep down, that it was probably the worst possible time to do so. Every price swing, every green candle, and every red candle felt incredibly personal. My mood rose and fell with the market's every twitch and turn, turning me into an emotional wreck. I was constantly glued to my phone, obsessively checking prices, and my sleep and relationships started to suffer as a result. That's when I realized that emotional discipline matters far more than picking the right coin or timing the market perfectly, because without it, the market will play you like a fiddle every single time. So I started setting rules for myself, profit targets, stop losses to protect my capital, and I adopted a dollar-cost averaging strategy. This took a lot of the emotion out of investing, allowing me to build a position gradually and systematically over time, regardless of short-term price fluctuations. The real lesson I learned through all of this, success in crypto and in investing in general, isn't about being the smartest person in the room, but about being the most disciplined and emotionally controlled. Crypto, with all its volatility and hype, ultimately forced me to become a true investor rather than just a reckless gambler. My next surprise in the crypto world? It wasn't a pleasant one, I can assure you. It was a harsh lesson, a baptism by fire into the darker corners of this digital frontier, the dark side of crypto, a place where scams lurk and fortunes can vanish in an instant. I naively joined online groups eager to learn and find the next big thing. These groups were filled with people hyping secret coins, about to 100x, promising unbelievable returns with little to no effort. The excitement was contagious, a fever pitch of speculation and FOMO. It's easy to get swept up in the hype. There were developers with big promises, revolutionary technology, and ambitious roadmaps. A buzzing community, all seemingly aligned and enthusiastic about the project's potential. It seemed like a can't-miss project, the opportunity of a lifetime. Everything pointed towards success, or so I thought. So, I invested. Putting in what felt like a reasonable amount at the time, I watched my money double, then triple in what felt like a blink of an eye. I was ecstatic, convinced I'd struck gold. Then, overnight, it all vanished. The gains, the initial investment, everything gone. Website gone. Group deleted. Money lost. Just like that, the project ceased to exist. I'd been rug pulled, a harsh reality check in the world of decentralized finance. Scammed by a project that disappeared with everyone's funds, leaving investors holding nothing but empty wallets and broken dreams. The loss stung, but the betrayal hurt more. The feeling of being manipulated and taken advantage of was a tough pill to swallow. Lesson learned: if it sounds too good to be true, it probably is. A simple adage, but one that carries immense weight in the crypto space. Crypto is the Wild West. Scams are everywhere, lurking behind every corner, waiting for unsuspecting investors. I learned to die or do your own research. It became my mantra, my shield against the deceptive forces at play. I stopped trusting anonymous tips and random messages promising instant riches. I started digging into teams, scrutinizing their backgrounds and verifying their credentials. I began dissecting white papers, understanding the technology, and assessing the project's viability. And I looked for real-world use, practical applications that demonstrated the project's value beyond mere speculation. That painful lesson made me a smarter, more skeptical investor, forever vigilant against the allure of quick gains. It saved me from countless scams since, protecting my investments and preserving my peace of mind. Not all crypto communities are bad, some are incredible. With established projects like Bitcoin and Ethereum, I found passionate, knowledgeable people eager to help. Podcasts, articles, and tutorials made complex ideas accessible. The best communities want you to learn and succeed. But there's a downside: endless noise and tribalism. For every smart insight, there's a flood of hype and misinformation. Echo chambers form, and coin loyalty gets toxic. I learned to filter out the noise. Follow real experts, not anonymous hype. Community is a double-edged sword. It can teach you or mislead you. Choose your influences wisely. Buying crypto felt easy, just tap a button, but true ownership? That's a different story. Not your keys, not your coins. Hit me hard. I learned about wallets, private keys, and seed phrases. One mistake and your funds are gone. The responsibility is all on you. Then came DeFi lending, borrowing, trading without a middleman. Suddenly I was learning about gas fees, liquidity pools, and smart contracts. Using a decentralized exchange felt like operating alien tech. Crypto's complexity is humbling and essential to understand. The buy button is simple, but the tech behind it isn't. I learned to slow down, never invest in what I don't understand, and respect the responsibility of digital ownership. If I could advise my past self, it wouldn't be about picking coins, it'd be about principles. First, focus on learning, not getting rich. Spend your first month studying, not investing. Start small, only invest what you can afford to lose. Think of it as tuition for your crypto education. This keeps emotions in check and mistakes manageable. Embrace doer, question everything, trust no hype. Vet teams, use cases and communities before investing. Finally, play the long game. Overnight riches are rare. Real wealth takes time and patience. Prioritize education, start small, think critically, and stay patient. That's how you turn crypto's chaos into a rewarding journey.